Welcome back to Taking Stock. We've been taking stock of the week that was. It was a week that was, although truncated, a bit troublesome. 3 days of continuous falls of 1% or even more than 1% on Friday itself. So what are the charts telling us from here on? Are there more depths to plumb? Let's ask the master of the charts. We invite Dr. C.K. Narayan of Growth Avenues into this conversation. Dr. Narayan, good afternoon. Thank you very much for joining us. Well, that really is the first question. We didn't expect to see 8,600 when we started this week. First up on Monday, would you think that it would be advisable to start with short trades or at least tactically be prepared for more sells and shorts? How does the week look?
I think what we should look at is the whole thing in a bit of a perspective. The market had on a trot gone up for about 10 sessions and it has now dropped for about 3. So that's not really anything out of the ordinary. No one really likes when the market drops, especially not when it drops with some, let's say, nasty surprises like it did a couple of days ago, and probably continued on that a little more. But I think the 3-day fall has really done nothing much. And when you reach down into those 8,600 levels on the futures, or probably even tap down a little lower, perhaps let's say 8,550, I don't think it damages the trend in any manner whatsoever. So I remain completely sanguine about the state of the market. It remains resolutely bullish. I think periodic interruptions by way of reactions are quite normal, and some reason or the other will show up, whether it is global or it's local. But for the coming week, I think the market would probably take some read from Reliance, which as I read the figures seems to have actually topped whatever expectations were there. I think the consensus for standalone was somewhere around 5,800 to 6,000. And Reliance seems to have topped that pretty handsomely. So I would look for Reliance to actually, kind of pull the market up. You had Hindustan Lever during this week really being very firm. I would look for Lever to pull the markets up. I think late we saw some of the PSU banks trying to stage a bit of a rally. I think Pharma has taken a fairly decent beating. Most of them are coming down into support zones. IT may be a little bit iffy because of the earnings. So I think the large batsmen or the heavy hitting batsmen of the markets are quite poised to take the market up rather than down. So I would remain quite bullishly poised and would look for any dip in the early part of the week as a buying opportunity.
Okay, Dr. Narayan, you spoke about Reliance that may pull the markets up because of the good set of numbers. But in the near term, say in the next 1 month or so, how is the chart of Reliance looking? What could the level be to which Reliance could rise?
Well, I think it's about time that we started looking at Reliance with some new eyes. We have been used to seeing it sort of remaining down for years together now. And the way it has actually come back, in a pretty roaring fashion from the recent bottom at about 800, set up all sorts of reversal patterns at the bottom, whether they be on candlesticks, whether they be on Elliott wave structures, whether they be on oscillator structures. These are all technical parameters which were quite positive for Reliance. It's sort of risen up to the level of the last recent swing I had about 950. So that was a kind of a natural resistance. I think it will be exceeded and we should be very shortly seeing the 4-digit levels being chalked up on Reliance. About 1,015 is the minimum that I would expect this rise to go to. And if the market trends were to pick up, we should be looking for substantially higher levels in Reliance. I would expect it to take the leader's baton from here on. Okay,
I have 3 stocks for you, sir, very quickly. If you can tell us whether they are sell on highs or sells anyway or buy on dips. Lupin, IndusInd and Bharat Forge.
Well, I think Lupin and Bharat Forge came in for a bit of a stick because of some brokerage downgrades. We have seen them taking the brunt of the selling maybe today, maybe over the last couple of days. In the case of Lupin and Bharat Forge, this is the first leg of the decline. So I don't think they'll promptly get up and start running and actually create new highs. So what you should expect there would be some sort of a rally to the recent decline. and for some consolidation to happen before they start rising into new highs. But I don't believe they should be seeing any significant lower levels from where they are at about 1700, 1750. Lupin is a great buy, I think, particularly for those who are longer term oriented. Around somewhere about 1170, 1195 levels, I would be a buyer as well in Bharat Forge. IndusInd Bank, I think, great set of numbers. My sense is that in this market, whatever company comes out with a good set of numbers will automatically become a buy. I heard you ask this question to the earlier guest. You asked him whether good numbers qualify as a buy in this market. My answer to that is most emphatically yes, because we are in a market where people just need a reason to buy, right? So they may be a little scared about the levels and periodically take some money off. But if you give them a reason to buy, they're going to come in to buy as soon as there is a dip. IndusInd Bank took a bit of a stick today. I think it's dropping down again into some sort of supports. Wherever it meets the support and reverses, you should look to buy it. Any stock which comes out with good results automatically qualifies for a buy. Maybe not on the same day, but as soon as it has a reaction, you should buy it.
Okay, that point is taken, Dr. Narayan. On that optimistic note, we let you go. Thank you for your thoughts and you have a good weekend. Well, that's the word coming in. Remain optimistic. The market might see some volatile moves, but you should look for every opportunity to buy into this market. On that note, let's get our colleague Mangalam Malu to tell you about all the key events that are lined up in the next week. Mangalam.
Thanks a lot for that. Next week, the markets will primarily be influenced by the results that are coming out. So the key events to watch will be the results, the fourth quarter results. On April 20th, a lot of mid-cap companies released their fourth quarter results. Persistent Technologies, Tata Sponge, and remember Autel Communications also comes out with their first quarterly results after the IPO. On April 21st, we have the biggies from the IT space, Wipro, HCL Tech releasing their fourth quarter results. Also Symphony Limited in the mid-cap space released their fourth quarter results. That stock's had a huge run in the last 1 year. On April 22nd, we have Yes Bank releasing their numbers. Also, the Odisha mining matter will be in the Supreme Court. Also, Kane India tax matter will be heard by the Delhi High Court. On April 23rd, biggies from the banking sector, we have HDFC Bank, M&M Finance and MRF releasing their numbers. But the market will also be watching the IMD's monsoon forecast data that releases later on that day. April 24th, we have Infosys and Siemens releasing their results. But all eyes will also be on the Supreme Court, as the Supreme Court is set to pronounce judgment on the IGL PNGRB case. Globally, the next week is full of manufacturing indices releases. On April 21st, Chinese HSBC Flash PMI will be released, while on April 23rd, French and German manufacturing PMI will be released. The market will also be watching the US unemployment claims data that releases on April 23rd, and on April 24th, the Eurogroup will be meeting. So those are the events that are likely to be watched next week. With that, back to you.
Thanks a lot for that, Mangalam. And with that, we wrap up this edition of Taking Stock. Thanks for watching and have a great weekend, or whatever is left of it. We'll see you on Monday morning.